Good morning, everyone. Welcome to the weekly live room here at binary.com. So glad you can join us today. The 2nd of June, we're going to take a look in this webinar, therefore, at what happened in the month of May and last week to analyze what could happen in June. As always, we're starting here at 8 a.m. UK time. My name is Chris. This is binary.com. And before we start actually looking at the charts and technical analysis, we're going to dive into this risk disclaimer, explaining that trading for exchange and global financial markets and trading in it is considered very high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. So, if you're watching this webinar live, by continuing watching this webinar, you agree with the disclaimer and the content mentioned here. And if you're watching the recording, then you can pause it as well to read all of the comments. Thank you for your attention. Just in case you are wondering, you can indeed watch the recording by registering yourself here at blog.binary.com/weekly trading room. Your name and email is enough. And today we're going to take a look, as always, at our major currency pairs and take a look, for instance, quickly at what kind of news events we would have this week. So the news this week, we got NFP week actually coming up. So that's always a bit of a big week, of course, a big news event that could rock the market. We also have interest rates, in fact, on the euro and pound later today. Sorry, not later today, later this week, excuse me. And otherwise, we just have the normal red tagged events. For instance, we have an Italian bank holiday. Besides that, we have Aussie retail sales and Aussie cash rate statement on Tuesday. And we have ADP G7 meetings on Wednesday. Thursday, we have those rates on the euro and pound. And Friday, we have NFP. So with that said, let's head over to the euro dollar. The NFP could have a big effect, obviously, but technically speaking, what do the charts say? We're now looking at the daily chart. And to me, you can see various lines here. So let's take it step by step. The orange line is indicating definitely a resistance spot that the month of May has hit. And we saw a big retracement off of that level. Month of May started, let's see, April, let's take a look. Right in here, you can see right in here, it had a move up, but after that, it was just downside after that, right? So a lot of downside pressure, and that happened after hitting this resistance line. And actually, in the month of May, we broke through the support line. So there was a lot of bearish momentum in May, but we are getting to a level where we might see a bounce. We are, first of all, getting close to the support line, despite the fact that we broke out of this daily support line, this daily uptrend channel. In fact, if you look at both blue lines, it's an uptrend channel. And yes, we broke out of that, but we don't have a clear downtrend channel, right? It's not like if we connect two tops that we have, or three tops like this, we have a clear channel. No. In that regard, price might still need to correct the downside like this to get a clear channel to the downside. So that's something that could happen on the euro dollar, a correction of the down momentum for more downside. Or the other option is that this downside is still a correction of this entire upside and we might head higher. So in both scenarios, upside break to me seems quite logical, seems quite probable, but we will have to wait for confirmation to know for sure. Excuse me. So the daily chart we saw already Thursday, Friday, bullish days up, but we still have lower lows and lower highs. Technically speaking, still in a downtrend. Therefore, we would need to break above basically this top here at 136.70 to have an idea, okay, that this price, this chart is making higher highs and higher lows again, and it's getting back into an uptrend. This is the monthly candle, and you can see very bearish candle, in fact. So that's why we have to be careful of the realization that when price does go up, it could just be retracing this bearish engulfing twin. So very important level. Obviously, also last month's high at 139. 140, close to 140. That's a level that might not get broken easily. So if price gets close to that, we have to realize that that's a big resistance level. It's a big resistance level anyhow because of that orange resistance line that we spoke about on the daily chart. This one, weekly chart here. You see? So the monthly very bearish. The weekly shows a bit different story. Yes, we have three bearish candles, but we had a doji last week. That is indecisiveness in the market, which means that this could be a turning spot potentially for that upside correction, which retraces that monthly bearish candle. Right now, just because we had a bearish month doesn't mean the upside is necessarily over. Look at this bearish month. I look at this one. I look at this one. We still have upside after that. So we have to be aware that the monthly support here at 134.75 is going to be an important level. If that breaks, we might see further extensions down to 127. Otherwise, with the doji in play here, a bit of a bounce for more downside or a breakup seems likely. So with that, with that path of least resistance in mind, I would say something like this seems likely, up because of the doji, to retest these tops, then down, and then we have to see if we get more long-term upside or more long-term downside. That still remains a question. This 136.68 here, very important level. That's a daily top, but also a weekly high, last week's high, and that will give a good indication what we can expect this week. That same holds true for this week's low at 135.88. If we break that, we can see some follow through down to 135, for instance. Now, one of the other things why a potential bounce might be in play is because of this divergence here on the 4-hour chart. We have clearly lower lows in regard to price, but we have lower highs with regard to the oscillator. Those are not in sync. Those are not confirming each other. And usually if you have divergence, that could be a signal that price is going to go back up again, or the opposite move, I should say, right? In this case, up. And this is the hourly, and you can see, oh, 1 second, adjust these charts, good. You can see that price has made on the hourly some divergence. Now we have to keep an eye on this green line too, because if price goes through that green line, we might see continuation of the downside. Just because we have divergence on the hourly doesn't mean we cannot fall. And a break of those green lines could indicate the breakout to the downside. Alright, so that's something to keep an eye on. Now why could downside still be in play despite all those factors that I mentioned that upside seems likely? Because we are in a downtrend channel. If you look at this orange line connecting the tops, that's in play. Plus, if you look at other pairs, you will see that actually dollar strength is kicking in. So it's not that clear that necessarily the dollar will weaken only against the euro. If you look at the pound and the AUD USD and dollar yen, dollar strength seems quite likely. So the euro dollar is the only exception where dollar weakness seems more likely. So if you look at cross-currency correlations here, then this euro dollar upside is becoming a bit more questionable, despite the divergence. So we have to keep an eye on this support line. It's already approaching it with quite a speed, so we have to see. Do we get a bounce here, or do we break below it? If we break below it, there could be breakout to the downside. If we break above that line, this orange line, we have a breakout to the upside potential. Still be careful of this top, as I said, 136.70, 136.68, and those would breakouts to the upside. This would be breakouts to the downside. Target of a breakout to the downside would be anywhere between 134.75 and anywhere at, let's take a look at the fib. Yeah, 134.75, 135, roughly there. So let's take a look at pound dollar and see indeed how that differs with the euro dollar. So pound dollar, in fact, is breaking or has broken through this daily uptrend channel. That uptrend channel has lasted ever since summer 2013, which means roughly a year now. Pretty long and big trend that took place, and very nice channel. Price is trying to break through it. Now, from a weekly perspective, you can see price has a bit of a wick below that channel. That doesn't encourage, well, it could be a good breakout, but that wick is it's not the smallest of wicks. It's still a decent sized wick, and a breakout like that is not a confirmed breakout in my opinion. So still a bit cautious with that. It is trying though, so we have to keep an eye on this development. The monthly candle is also pretty bearish, as you can see, but that hasn't stopped other months from continuing, right? When we had here a bearish candle, price went up. When we had here a bearish candle, price went up. When we had a bearish candle here, price went up. So we have to see if we have a bullish candle following the bearish candle like the previous three examples. This could be the one that is different. You never know. We are at major resistance, which is 170.40. Why? Because if we zoom out, you can see here at tops, big tops. So that could be a bit different story. So obviously, last month's low is going to be very critical for that analysis. When we had a bearish candle, we roughly stopped at that low, so that would mean a big level to keep an eye on. On the weekly chart, that would look like something like this. You can see here, these levels are going to be key. Something like this, these horizontal levels right there. If we put a fib from this side right here to this upside, from this bottom to this upside, you can see that basically the fibs corresponding with the horizontal support. When these levels break, then we should expect more downside, right? Slowly but surely, we would be indeed a more confirmed downside. At the moment though, although price is moving with the lower lows and lower highs on this daily chart, we know that there's potential support below, and 4-hour chart is showing this momentum here. Good trend to the downside, in fact, already. If you look at the fact that price has already 3 hits on these top line and has a couple of hits here at the bottom, that is a trend channel to the downside. And then the hourly, we see the support line. So break of that support line would mean price is going back into the direction of the trend, and we could see a fall with the pound dollar. If that doesn't happen, and price were to break above this resistance line, we might see price make a further correction to the upside and then hit more resistance higher above for a potential bounce to the downside. All right, so I hope that's not too confusing. Sometimes, if you look at multiple time frame analysis, it is just going to be a bit more confusing because not everything is lining up, right? We have basically on a monthly and weekly still the upside momentum in play, but the daily is showing down and a potential break, just like the 4-hour. So those 4 time frames are not lining up. You got two momentums, 2 pushes in both directions. So we have to see which side is the winner. That's important. So at the moment, downside is winning, but upside can regain control at these levels. That's something we have to be aware of. All right. So when we look at the lower time frames, then if that's the case, then we know that if this breaks, the green line breaks, that we can expect a downside momentum, most likely to the next support levels. If it doesn't and it breaks to the upside, it is more risky, but then we know that that could be an indication that the downside momentum is not going to be in play, and the weekly, monthly uptrend is maybe still supporting this currency to go back up, and then the next resistance level could be that red circle. So if you have any questions, by all means, let me know. Of course, if this is unclear in any way or fashion, you have the chat there to ask a question. AUD USD is falling hard, and that doesn't surprise me in a way. This triangle breaking to the downside here. Now, why is that triangle breaking to the downside? Let's take a look at the weekly chart here. And here we had a clear uptrend channel. Now, the pound dollar has a better uptrend channel. Why is that? Because that uptrend channel has lasted already since summer last year. This uptrend channel only since end of January. So it's a bit shorter. Still, it had a very good balance and very good harmony to the upside. Good angle, multiple hits on both sides, and therefore a sustainable uptrend channel. One that is very neat, maybe even a classical textbook example of how a uptrend channel should look like in that regard. So couldn't be better. Now, trading it to the upside, we had some opportunities definitely to trade that to the upside. But what happened recently, or 2 weeks ago, price broke out of it with a clear bearish momentum. This one right there. We have the red dot. That candle basically showing a lot of momentum to the upside, to the downside, sorry. Bearish momentum, obviously. Now, why is that showing bearish momentum? First of all, it's a big candle. If you compare it to the other candles, it's a decent sized candle. Second of all, the close is near the low, indicating that the bears remain in control throughout and towards the end of the week as well. And third of all, of course, is breaking out of that channel, and therefore the uptrend certainly not in play anymore. It's not, not a factor anymore. Whether it's a downtrend still remains to be seen because the horizontal support, where the red line is, at 92 still hasn't been broken. So if that horizontal support breaks, then I would consider it a downtrend. Not until then, so I still consider this more like a neutral area for the moment. All right, but considering the fact that 2 weeks ago was a very bearish candle, and last week got about halfway, there is a decent chance that although we didn't break 92 support, last week's candle was just a retracement of the previous week's candle of 2 weeks ago, and that last week was just a retracement in that regard, an inside candle for more downside. You can see the downside momentum swiftly entering the market at the beginning of this week for that momentum continuation. Now, to me, the confirmation is still the break of 92. But the fact that last week didn't break the high of the week before is showing some retracement potential. But we're not sure. Last week it was bullish. That means that last week's low, which is anyhow close to that weekly bottom at 92, 92.10 to be precise, which is only 10 pips away from 92, is still an important level for the market. Let's take a look at the monthly. The monthly we see actually, funny enough, two dojis, although it's probably difficult to see because of all my trend lines here. Let me take that off so you can see it a bit better. Something like that. So two dojis in play here on the monthly chart with pretty big wicks at the top. The last 2 months. Last month had even a wick at the bottom as well. So what do we have on the USD? A lot of indecision, in fact. And now you can see that particular fact a bit better, I think. So you can see that indecision here with two big weekly wicks, especially on the tops, but even on the bottoms. So indecision 2 months in a row. So if we break that 92, or if we were to break above 94.67, obviously that would indicate which of these two directions is winning. If we break the monthly high or low, then that will indicate that the price is heading probably higher or lower for some continuation at least, right? So this is going to be very interesting how this USD handles itself. Let's dive into the daily chart to see what's going on from a closer perspective. And you can see that Friday had a doji. So when we broke out of that uptrend channel, we hit the support, bounced to the upside, and then price hit resistance back at these bottoms here, in fact. And the doji, the daily doji on Friday, indicating indecision at the broken trend line, at the resistance, and boy oh boy, the market surely using that indecision for the fact that that could be a stalling spot for more downside again. Today, a big, massive day down. The break of the triangle was the starting spot for that downside momentum. So, in my opinion, looking at this formation, and you hook back to resistance here, somewhere in here, you can even put a fib on this from bottom to top, like that on the hourly, and any fib 38, 250, 61.8, even 78.6, all of these are potential resistances for more downside. Downside down to 92. Downside down to 92.25. So that's how I'm looking at it right here, right now. But, there's always good and always useful when price does get back to a fib and resistance to look for confirmations that price is indeed turning at these spots. Otherwise, you never know. Right? We still have, last week was still a bullish candle, so we got to be careful with that too. Right? Although you can't see it now. Let me get rid of this fib for a second. It's maybe not that visible. Good. Last week was still bullish, so as I said, still neutral territory. So although I think the downside looks more stronger when price retraces to these fibs. I would look for confirmation because of last week still being a bullish weekly candle. So that's something to be aware of. What else are we going to take a look at? The USD yen, of course. Basically, I think it's enough and sufficient to look at this weekly chart in the sense that price is just going back and forth for 4.5 months now, 5.5 months now, or, yeah, 5 months, just going sideways in a way. Has a relatively tight range where you have 101-ish at the bottom, 103-ish at the top, right? 103.50-ish. So about a couple hundred pips. That's not a lot for currency pair to go sideways in a tight range like that. Means a very you know consolidated formation on the dollar yen at the moment. Price recently 2 weeks ago bounced off that bottom again. So price could stay in this consolidation for longer than we imagine. It could really stay long here. So a break of that bottom of 100.70 would be one way of knowing that the consolidation is over. A break of this resistance line, for instance, like that, or a break of this horizontal resistance of 103, for instance, would be another way of doing that. Knowing that there's a decent chance that price, when it breaks above 103, has a chance of breaking to the upside. Now, the bigger break, however, is when price is able to push through this orange line. The orange line here is indicating resistance from a monthly chart, and if price can break above that resistance, then we have breakout potential to the minus 272 target at 111. If it doesn't, who knows, price could break through this resistance line, hit 103 and still consolidate. All right, so or break above 103 and then hit that monthly resistance line and still consolidate. So if price is still below this line or this line, especially this line, all of these are still resistances. Still have to be careful with the expectations we could have to the upside. If price does go to the downside and break below, we have space to 100 and lower. For the moment, if price is in between these lines, these green lines and orange lines, then I would expect more consolidation, and then the currency is really not too interesting. From a weekly perspective, we did have a pin bar here, a weekly pin bar. So in that regard, a break above these resistances here seems maybe a decent probability because of the weekly bullish candle and the doji following after that. But a lot of space, as I said, is not prevalent, is not apparent here on this chart. Gold fell a lot here last week. Big bearish candle. So there could be maybe some more downside now that price has been able to push through the resistance. The broken support can become resistance, as we know. So if price hooks back to that level, we might see continuation of XAU USD to the downside. So in that regard, we're back in the lower lows and lower highs here on the gold. We have a bottom at 1180. So in that regard, price could fall there before it bumps into any major support levels, and it can rise up to 1275 slash 1320, and then it will bump into major resistance. So up, down, and then probably a bounce again at the support level seems likely at the current analysis. All right, so let's see how today and this week handle this downside. You can see a clear break of that triangle to the downside when we put these lines here. You can see that triangle, very neat triangle with good harmony and balance, and price broke to the downside. So when you put a fib from top to bottom here, price can stop at any of these fibs for more downside. That's what I would think at the moment. Well, folks, that wraps it up for today's analysis. Thank you so much for spending your time with us, of course, as always. If you have any questions, let us know. We can take a look at that before we wrap it up. In the meantime, I'll just share that link one more time so you can get the recording when it's finished if you want to take a look one more time, or if you are not able to see the live webinar next week on the 9th of June, same time, same place at 8 a.m. London time. This is blog.binary.com/weekly trading room, and you will get the recording when it's ready, a few hours from now probably. And as always, I wish you great trading this week, good hunting, good analysis, and a good week. I don't see any questions, so I assume that everything is clear. Thanks again, and see y'all soon. Cheers.